Good afternoon, everyone. Welcome to the Philadelphia Public Bank Summit. Happy to see so many of you all here today on this call. So my name is Steve Paul. I'm a community organizer here in Philadelphia, and as well as a steering committee member of Philadelphia Neighborhood Networks, which is one of the many organizations that is part of the Philadelphia Public Bank Coalition. I am honored and excited to serve as one of your hosts for today's event for the next few hours. I'm going to turn it over to my co-host to introduce herself, and then we'll get right into it. Vanessa?
Thanks so much, Steve. It's so exciting to be here today. I am Vanessa Lowe. I do a couple of things. I co-chair the Economic Dignity Team for POWER, which stands for Philadelphians Organized to Witness, Empower, and Rebuild. And I also have a radio show called Vanessa's Money Hour on Germantown Community Radio. So glad you're here with us today. I am going to introduce Councilmember Derek Green. Councilmember Derek Green is serving his second term as City Council member at large. He has a background in banking and a deep commitment to sustainable economic development, particularly for Philly's Black and Brown neighborhoods. He chairs the Committee on Finance and Disability. His top legislative priority is the establishment of Philadelphia Public Bank. Councilmember Green, I'll turn it over to you.
Thank you, Vanessa. Steve, thank you for moderating this outstanding conversation with people from all over, not only the city of Philadelphia, the Commonwealth of Pennsylvania, the Mid-Atlantic region, but across the nation. It's a real pleasure to bring together all these various people and activists, all committed to bringing together a vision for a public bank. Now, today's Philadelphia Public Bank Visioning Summit is a real opportunity for people to hear what's happening regarding this issue, not just at the Philadelphia level, not just around states around the region, but really around the country, but also give all of the attendees an opportunity to network, communicate with each other, and really learn about public banking and meet so many of your peers that are working on this issue. So as you're putting your information in the chat feature, make sure you maybe have a pen or a pencil to jot down some names, some information, some contacts. We hope that this summit will be a great opportunity to really engage in a lot of different conversations with people from all around the country who are committed to public banking. We're going to have a great panel. I want to thank the Philadelphia Public Banking Coalition for all of their hard work in pulling this activity together. We have a number of organizations and co-sponsors from Philadelphia Neighborhood Networks, RC, Our Schools, PA Working Families Party, Sustainable Business Network, the Philadelphia Area Cooperative Alliance, Disabled in Action, Power Interfaith, ACRE, the Philadelphia Revenue Project, the Public Banking Institute, and a Smart Collaboration. If I missed any of our co-sponsors, charge it to the brain and not the heart, but this really has been a collaborative activity. And we've been building upon this conversation through our monthly Financing Philadelphia's Future conversations, where we've been delighted to have who I call the Oprah of public banking, Vanessa Love, who's been able to host us every month and have a great conversation. We've had a number of dialogues regarding public banking here in Philadelphia. And I'm glad you've now added your co-host, we'll say the Steve Harvey of public banking, Steve Paul, who's going to be a great person to join in with Vanessa. So we're going to have a great opportunity to have some great conversation and great engagement. We don't have to worry about the weather because we are inside, we're here virtually, and we're going to have a great day having a great conversation about public banking. I just can't wait to hear all of the conversations and the perspectives on how public banking can address so many different issues, from racial justice and the cooperative economy, public banking and local inequities, and dealing with issues like land trust, housing, and environmental justice, as well as I said at the top of my presentation, the movement of public banking all around the country. And we'll spend a little time talking about the legislation we're working on here in Philadelphia. So thank all of you for being here this afternoon to join, which I hope will be a great, engaging conversation where you get a lot of information, have some fun, meet some new people, and help us move forward with this initiative of public banking in the United States. So thank you and welcome.
Thank you, Councilman Green, for that great overview of our agenda today. Super excited. Before we get right into it, I wanted, as someone who works on state and local policy, as an organizer, I'm someone that believes the people closest to the problem are closest to the solution, right? So we want to hear from you. We want this to be a conversation. We want to know how you feel about a public bank in Philadelphia. We want to learn if there's anything you want to hear about. Is there any suggestions you want or feedback you want to give us? So please put, as Councilman Green mentioned, please put your questions in the chat. And yeah, we want this to be sort of an interactive activity. This event today is structured in a way to incorporate questions for the presenters all along the way. So we want to make sure we're addressing the issues that you want to hear about and the things you want to learn about. First kind of agenda item, a quick poem from steering committee member and Philadelphia Public Bank Coalition member, Susan Window. We like to start, every event to get our spirits, our mind, and everything right and get us focused. For those of you who don't know Susan, Susan Window is a member of Philadelphia Public Bank Coalition, where she represents both Power Interfaith's Economic Dignity team, as well as Philadelphia Neighborhood Network. She is a poet, a teaching artist, and an explorer of the mystical path. Susan is an author of 2 books of letters and poems titled Through the Gates, A Practice for Counting the Omer, and its newly published sequel, The Second Omer Journey. Susan offers her poetry as eulogy and inspiration in interfaith religious services, as well as of a number of rallies, fundraisers, and other gatherings for social justice. Susan makes sure that every meeting that we do at the Public Bank Coalition begins with a poem, and this is no different. So with that said, I'll pass it over to Susan.
I don't know if it's a quick poem, but it's not too long a poem. I try to do everything slowly to move us into the depths of why we're here, to remember that. So here we are. What is the purpose of an economy? What is the purpose of an economy? You must take the words in slowly to remembering to savor the fragrance of the question itself. Purpose? Economy? All day long, the household brims with brothy pleasure, air infused with anticipation, the coming satisfactions of a meal to be shared with all who breathe together in this house. Now, when the time is right, take the words to your mouth, enjoy the doubled kiss of purpose. Your lips were meant for this cup. Economy, it means management of the household. Let the sounds with their meaning traverse your happy tongue and be swallowed. They will land in the cavern of your belly, in the place where you need to be fed. No one goes hungry. No one goes hungry in a good home. Everyone has a place to rest. Let us do the work. Let us do the work. The words are asking, what is the purpose of an economy? Let us make this home a good home.
Just want to give a few moments of silence to take that in. Thank you, Susan, so very much for that. All right, next on the agenda is we're going to watch a brief film. It's a cartoon, but it is...
In this city, in anywhere USA, the residents of this city have decided they want a park. The city council agrees the park is a great idea. But how will they pay for it? The city needs to borrow money. But borrowing money means the city has to pay a lot more money in interest and fees that could double the cost of the park. And that money leaves the city. It goes to Wall Street investors who really don't care about the park or the city at all. This is a bad deal for the city and its residents. There's a much better option. An option that's been proven around the world. A public bank. A public bank is a bank owned by the residents of a city, state, region, or territory. Private Wall Street banks just want to make profits for their shareholders. But public banks have a mission to serve the public good. They have to reflect the values and needs of the community. And that makes all the difference. Politicians don't run a public bank. Their job is to just set it up by listening to what the people need and want. Public banks are run by skilled local bankers who know their neighbors. Residents are on the supervising board to keep tabs on what the bank's doing. Public banks can save communities lots of money. First, they cut out expensive Wall Street fees, which can be hundreds of millions of dollars a year in a big city. Second, they can lower interest rates on the city's loans, which means there's more money to spend on other projects. Third, their profits go back to the city, not to Wall Street, so a public bank can make money for the city. All this means the people of the city have a lot more money to fund all the things they need, such as bridges, good roads, good schools, renewable energy, affordable housing, lower taxes, and the park the people wanted. They now control their own money, and they can build their own future. Join the movement. To find out more, go to publicbankinginstitute.org.
All right. Well, that brings us to our first panel conversation today. And we have an amazing moderator for this panel. We'll be focusing on, public bank as it relates to racial justice and cooperative economy. And so we'll be in this conversation for about 34 minutes. And remember, at the end of this conversation, there'll be about 10 minutes of Q&A. So when folks are having a conversation, we encourage you to drop your questions in the chat as you think of them, or wait till the conversation's over. And then Vanessa will lead us through a Q&A. So our moderator for this conversation is Walt McRee. Walter was once a Philadelphia FM radio personality and recently became a founding member of the Pennsylvania Project in 2011 and helped us start the Philadelphia Public Bank Initiative. He became president and board chair of the National Public Banking Institute in 2015, where he continues to serve as a senior advisor and a producer of the public banking radio and TV shows, It's Our Money and the Public Bank Solution. Walt has been involved with many state and municipal banking initiatives nationally, including as co-director of Banking on New Jersey. In 2017, he founded the Public Banking Associates, a national consultancy of public banking experts, which advises government leaders who are pursuing the creation of public banks. So Walt is an amazing person to be moderating this conversation for the next 20 minutes. With that, I'll turn it over to you, Walt.
Well, thank you, Steve. And hello, everyone. As we get started on this afternoon of discussion about creating a publicly owned bank for Philadelphia, a bank that'll focus on serving the interests of the people in our communities, let's take a moment to consider why we're here talking about this at all. The short answer is that our current banking system is privately owned and focused on making profits for itself, using our tax money to do so. In just 1 year, the city of Philadelphia sent almost $250 million to Wall Street just to pay for the interest on the money that it borrowed to take care of its needs. Our first speaker today, Saqib Bhatti, reports that and this is a quote, our current municipal finance system is intentionally broken. It allows banks and investors to profit from the pain and suffering in communities of color and poor neighborhoods. And of course, we're not alone. State and local governments all over the country are obliged to use Wall Street banks and private funding out of necessity because there have been no alternatives. And that has cost the cities and states of the nation $160 billion each year for the privilege. Now, no one is saying that a Philadelphia public bank is going to do away with that enormous annual interest expense in the near future. With our own bank, though, we can begin a virtuous cycle of self-investment in which we keep our money at home and invest in each other rather than having our money used by Wall Street banks to speculate on global financial intrigues. Now, one thing we all need to know and remember as we start out today, and that is that banks create new money when they make loans. It's not borrowed, it is created. Just as the same process that was used by our forebears in Philadelphia over 200 years ago, which is really how the public banking effort in America started, the American system. Banking was then, and should be now, a public utility that's dedicated to providing the lifeblood of our economy through affordable, responsible credit. So let's also make another distinction as we start out today, and that is namely that the drive for public banking is not a drive against locally owned community banks and credit unions. They are our invested partners in community development. A Philadelphia Public Bank can be a boon to their success. As you'll hear from our second speaker, Dr. Amara Enyia, there are some wonderful prospects that we could reasonably consider if we had our own bank, like creating a cooperative economy that builds on inherent community economic strengths. Amara is a highly regarded leader in community economic development. She is a public policy expert for city and state policy and has been working also in international affairs and foreign policy. And she is an esteemed member of our Public Banking Institute Advisory Board. Saqib Bhatti, who is our first speaker, is the co-executive director of the Action Center on Race and the Economy. Saqib has been a notable contributor to the national public banking discussion over these years, landmark writings for the Roosevelt Institute and many other channels. Saqib launched the Refund America project back in 2013, and he serves on the boards of the Americans for Financial Reform Education Fund, the Midwest Academy, and many others. Now, let's turn it over to Saqib for his presentation. Saqib?
Thanks, Walt. Good afternoon, everyone. I'm really thrilled to really be joining you all today at this banking summit because really public banking is a racial justice issue. So let me just say that again. Public banking is a racial justice issue. To be able to fully invest in Black and brown communities in cities like Philadelphia, we need to take Wall Street out of the picture. We know that what healthy, thriving communities look like. Communities where schools are fully and equitably funded so that every child has the opportunity to shine. Communities where there are deep investments in public health and social services to ensure our families have a strong safety net. Communities where every family can live in a home they love and can earn a thriving wage doing work that is meaningful to them. But here's the thing, right? In our capitalist economy, thriving communities require robust financial infrastructure. And that is why public banking is a racial justice issue, because we know that we cannot rely on the goodwill of Wall Street or the private sector to provide Black and brown communities a critical infrastructure that we need in a fair and equitable manner. So, fun fact, the Bureau of Labor Statistics calls the banking sector credit intermediation. And so what does that mean? It means that bankers are supposed to be essentially middlemen whose job is to help those with savings connect to those who actually need to borrow, right? So pay X% interest to depositors, charge Y% interest to borrowers, and their profit is Y minus X, right? And that's at least what traditional plain vanilla banking was supposed to be. Now, this is how you know that our entire economy is basically a scam, right? They say that markets are efficient. Well, if banking is credit intermediation, then an efficient banker would be one who only takes a small cut for helping borrowers connect to depositors. But the finance sector now accounts for more than a third of corporate profits in the US, right? How efficient is a market in which a middleman that produces very little actual value accounts for a third of the profits? So how have these intermediaries become so profitable? It's by extracting wealth from their customers, which is us, right? And we have seen time and again that banks target BIPOC communities with the worst extraction. Banks like Wells Fargo targeted Black and Latinx families with predatory mortgages. And then when those families went into foreclosure, those same banks were less willing to offer them sustainable loan modifications that would help them stay in their homes. banks are less willing to lend to Black-owned small businesses, which are the bedrock of Black employment. We have a Federal Reserve chair right now that says, oh, there's nothing we can do to address the racial wealth gap and the racial employment gap. So if you actually invested in Black-owned small businesses, you could actually make a dent on the Black unemployment rate and actually help achieve equity there, right? Bank call center operators have come forth and said that they've been directed to offer higher interest rates to credit card holders who, when they call in, they press 1 for a Spanish-speaking operator. So if you speak Spanish, your only option in many places is a higher interest rate. Right? Bank branch closures, when banks are closing branches, they're nearly always targeting that in Black and Latinx communities, creating banking deserts. And especially when, as ATM fees continue to climb for folks who have to go to ATMs or earn for their own bank, in these banking deserts, what it means is that BIPOC folks who live there actually end up having to pay for the ATM fees, right? They're disproportionately hit with these higher ATM fees. And it's not just ATM fees, it's overdraft fees, late fees, a whole span of other fees that BIPOC customers bear the brunt of. And let's not forget that it's not just us as individuals who banks are extracting from, it's also us as taxpayers. Just like banks target cash-strapped cities with predatory loans, they also target cash-strapped cities and states and school districts with predatory municipal finance deals that drain hundreds of billions of taxpayers from our budgets and result in services. And we also know that just like banks target BIPOC families with higher interest rates, we have shown that places with low incomes, they're actually using this debt to take away our local democratic rights, particularly in Black and brown communities. So banks sell us this debt on predatory terms. And then when it comes time for budget cuts, it's always services in Black and brown communities that are on the chopping block, because that's how the system is designed. And that is why public banking is a racial justice issue. If we have our own bank that is accountable to our communities, then we can ensure that we have the financial infrastructure that we need to thrive without being at the mercy of bankers that are just looking to scam us so they can pad their profits. A public bank can help us offer high quality banking options to underbanked communities, especially in Black and brown neighborhoods across the country, across the city of Philadelphia, and every place where we do this. It can help our cities and school districts access low-cost loans so we can stop paying the $160 billion in interest to bondholders on debt that we have to pay as taxpayers. And then we can fund the services that we need in our communities. A public bank can help us invest in Black and brown communities by taking Wall Street profit out of the equation and ensuring that our money stays in our communities. And more than anything else, that is why public banking is a racial justice issue. Thank you.
All right, thank you, Saqib. And now we turn to Amara Enyia in Chicago.
Thank you so much, Saqib, and thanks to Walt, of course. It's always a pleasure working with you. And also thank you to everyone that's on this call for this very important summit. I am really excited that so many have actually gathered on a Saturday morning to talk about public banking. 5 years ago, or even 10 years ago, this would have been unimaginable. I don't think we would have had the numbers that we're seeing just for this summit today. So it's very encouraging. I think what I want to do just briefly is to add a little bit of context to the conversation and what we're really driving at. I think Saqib has done an amazing job of sort of laying out the role that private banks have played in our cities, the role that they have played in the ongoing disinvestment in many of our communities. But if we zoom out a little bit to think about what we're actually talking about, we're talking about whether or not people are able to live fully actualized lives with dignity in their communities. Ultimately, everything that we're talking about today is tied back to whether or not people have access to the things that would create a high quality of life, whether that's healthcare, a home, education, a job, and so on and so forth. And so while we're talking about public banking, we're really talking about what kinds of systems can we create that would allow people to live fully actualized lives with dignity. And it's important that we keep that at the forefront of our minds. What that means is that public banking is part of what needs to be a holistic approach to addressing the many challenges that we face. And so this is a structural issue that we're trying to address. It's a systemic issue that we're trying to address. And structural and systemic issues require structural and systemic solutions. We've all seen how, particularly when there are extreme challenges that we're all facing, when we get sort of symbolic measures, symbolic gestures that don't actually address the root causes of our issues. We know that this is not a situation where a few more grants here and there will be able to turn the tide. This is not a situation where if more people get access to, let's go for a drive. More people getting access to a few jobs here or there, particularly if they're not even paying a living wage, will address the issue. And so for those who are elected officials in this summit, this is a time where we have to be bold. We know that far too often, the approach is to sort of play to the middle, or the approach is to sort of default to the notion that we have to compromise. And then when we look up, we've not even gotten the bare minimum of what people need. And so a lot of the unrest that we're seeing in our communities, particularly last year, is a result of longstanding issues that have been brewing for decades. Again, systemic and structural issues that require systemic and structural solutions. And so we talk about public banking, but we're also required, in my view, to talk about what a cooperative economy looks like, a solidarity economy. So this is really rethinking how we democratize work. So the notion that people don't have to come to work when they're sick, all of a sudden that became front and center because of the pandemic. But prior to that, people were expected to simply come to work sick. The notion of paid sick leave was earth-shaking for some. The notion of a wage that actually is individual and family sustaining, right? The notion of being able to partake in the benefits of one's labor collectively in a worker-owned cooperative. And so we have to start rethinking not just specific components of the economy, but the economy as a whole. And that includes worker-owned cooperatives. It includes talking about housing cooperatives as we're staring at just an extreme housing crisis. For those of you who are following what's happening in the housing sector, you have these new companies that masquerade as tech companies. They're not tech companies. They've just figured out how to create an internet or online mechanism to, again, siphon resources from those who can least afford to pay for their own profit. But the latest that, and I feel compelled to share this example because housing is so critical, where they're buying up single family homes and then selling off pieces of it to individuals under the guise of the notion that everyone should have access to a second home. That's literally, this is a company called Picasso. That was the ethos when they started. They said everyone should have access to a second home, while we're looking at people who don't even have a first home, right? So housing cooperatives, community land trusts, the issue of gentrification and people being pushed out of their communities is huge. How do we maintain wealth in communities? How do we ensure that people who live in their neighborhoods have access to the land, even as it appreciates in value, that it doesn't become a reason to push people out of their homes? These are the many components of the solidarity economy, of which public banking is a major part, because the realm of finance has been used historically, almost from the very beginning, to the detriment of the masses. And I think as we're talking about public banking, and we're talking about banks in particular, it's important to have a bit of historical context. So many of these Wall Street banks that we reference, your JP Morgans, your Bank of Americas, they got their start using enslaved people as collateral. So this is something that we just need to know. From the very beginning, many of these Wall Street banks used enslaved people as collateral. And we know that Bank of America, what's now Bank of America, profited from Haiti having to pay reparations to France for their independence. These are facts that if we go back into history, you'll see the predatory leanings or the predatory tendencies of these banks from the very beginning. They built their institutions on the backs of Black people, on the backs of Indigenous folks, on the backs of enslaved people. And now, as we fast forward to 2021, there's a notion that somehow they will be able to lead the charge on how to address the systemic and structural issues that our communities face. And I think that historical context is important for these conversations so that we understand these institutions that we're dealing with. Because what's become increasingly popular, particularly after the uprisings last year, is many of these Wall Street banks making these drastic proclamations. They're going to give $30 billion, or not give, they're going to commit $30 billion to addressing racial injustice in this country. They're going to give $5 billion, $10 billion. If you go down the list, many of them have made these kinds of commitments in the last year. If you actually do a little bit of digging, you'll see that what's actually being committed are just other mechanisms that will ultimately result in profits for them. And so we cannot rely on private banks to address systems that were actually built to keep the masses, to essentially keep the masses from being able to live self-determining lives of dignity. Because I'm based in Chicago, I always have to use Chicago as an example I hate to use it as an example of, the things that are wrong, but because there are many great things about the city, but I think there are some instructive examples that we can use right here to help underscore why this conversation, this summit on public banking is so important. One is there was some research that was done last year in 2020 that looked at lending practices in Chicago. And it looked at the major banks that we have. Most of them are depositories for the city government, and found that when it came to home lending, JP Morgan Chase, for example, lends 8 cents to every dollar. So for every dollar that was lent to a white borrower, they lent 8 cents to a Black borrower. This bank lent more to one predominantly white community in Chicago than all of Chicago's Black neighborhoods combined. And just so that you know, Chicago is about 30% split evenly when you look at the racial demographics. So it's about 30% white, about 30% Latino, about 30% Black, roughly speaking. So the notion of a bank lending more to one community, one predominantly white community in Chicago than all of Chicago's Black neighborhoods combined is stunning. And again, this is not in 1960. This is in 2020. This is last year. Other banks have similar statistics when you actually look at their lending practices. And we know that the flow of capital into communities is one of the best ways to actually increase things like household income, many economic indicators. And what we've seen is that redlining never really ended. What we've seen is that these banks who hold hundreds of millions of dollars as a depository for the city of Chicago, our money that we pay the city, can't even bring themselves to lend by any measure, an equitable manner. More recently, just about a week ago, we found that the Inspector General did an audit and found that the city is not even using lending data to determine which banks are depositories. So the money that they are getting as depositories for the city, they still can't really be bothered to actually change their lending practices, and the city wasn't holding them accountable. So again, where is the benefit for these institutions? It's actually been quite harmful. We talk a lot about racial justice issues and how public banking can fit within the racial justice framework. And I think it's important to note that it is not a panacea for all of these issues. There will still be the need for accountability when it comes to, even with the public bank, there's still a need for accountability. There's still a need to be connected to these injustices that exist in society. But what it can actually do is ensure that there's some return on investment. We have to think about the fact that in so many of our communities that have been disinvested for decades, what are our residents getting for the money that they pay to the city, whether by taxes, by fees, fines and forfeitures, or otherwise? They're not getting a return on investment when by every metric, our communities are still disinvested. We still have a 16-year life expectancy gap between the downtown of Chicago and the west side of Chicago, about 3 miles west, 16 years. When we look at unemployment, we see a huge gap in terms of how our Black and Brown communities are faring versus other communities. And when we look at how resources, how funds, how capital is invested, we continue to see the uneven investment that is only perpetuating a lot of the problems that we're seeing. And so last year's uprisings, I think, are not just in response to what happened last year. It is people saying in their communities that enough is enough, that we can't accept symbolic wins any longer. We can't accept sort of nibbling around the edges of our issues with these sort of solutions that people know won't really work. This is a moment where we have to meet the demands of the people, and we have to meet them where they are. And again, what people are demanding are structural changes to the economic systems that govern our lives. And public banking fits within that framework. It fits within the framework of a solidarity economy. And for those who are in positions of leadership, it requires a boldness and a courage to go beyond what's been done before. But for everyone else on this call, we also have a role to play. As I mentioned in my opening, 5 years ago, and definitely 10 years ago, I can't even imagine having a call with so many folks on the line who are interested in public banking. I mean, those of us who've been early in the work know the crickets that we heard whenever we talked about an issue of public banking, or even talking about cooperatives and worker-owned cooperatives. It was just this foreign concept. So much work has been done to get to this point by so many of you, by the Public Banking Institute, to really have a movement where around the country, progress is being made. And so my charge for all of us is to continue pressing forward, that we have to talk to our people, we have to organize in our communities, and we cannot settle for anything less than the structural and systemic changes that our people deserve.
Amen. Thanks, Amara. Vanessa is going to handle some questions from the group. But thanks so much for that, Amara. Vanessa?
All right. Wow. Really great information. Fantastic stuff. So we have Frank Iannuzzi and Beth Finn. This is a team effort here. Who are taking your questions from the chat. When you're entering your questions, please clarify if you're asking a particular person. We had Saqib Bhatti and Amara. I apologize, Amara. I'm not seeing your name right in front of me, but if you know who you're asking the question to, if it's specific to a particular person. Right, let's go to Beth first. Beth, any questions?
Yes, thanks, Vanessa. We've had a number of questions in the chat, and some of them are more general, and I may save them for a different panel because I think they're more appropriate for those panels. But for this panel, I think this is a more general question for the panel. Colleen has asked, are credit unions better, meaning are they less predatory? Should this or would this be a model for a public bank, something more like a credit union than a traditional bank?
I'd like to start with Amara for that one. Amara, can you speak to that?
So the question is whether a credit union would be a better model. Mm-hmm. I think it's important, and Walt kind of outlined this in his opening statement, that the public bank doesn't compete with local banks or smaller banks or community banks, but it is absolutely necessary as a replacement for the Wall Street banks that currently are depositories for cities and for states. There are different functions. So, for example, a credit union could be for individual depositories, whereas a public bank, it doesn't fit within that framework necessarily. Handling things like major infrastructure projects for cities or for a city or for a state is sort of a different kind of work. So there are differences that a credit union won't necessarily fulfill. But again, a public bank can actually enhance the ability for a credit union to expand its own capacity and can play that same role for community banks. So it's not in competition to but a public bank is definitely a replacement for the current landscape of Wall Street banks that our city and state governments are tied to. Walt, I don't know if you have
I would just say that credit unions have certain regulatory limitations on what they can produce. You were indicating that. But also what you said was very important is that credit unions work directly with people at the street level, Main Street level, which is why they're so important along with community banks. The public bank is really they're kind of a partner to local lenders, bringing in an extra capital strength and capability, but also focused on different projects, bigger projects. So I think you made that point also, Amara. Yeah.
One thing I'd like to just add to that is, so one of the other big things is that credit unions as well as community banks, they're still operating within the rules of the existing system, right? The truth is that credit unions will often also charge overdraft fees, right? They will also charge ATM fees. There's sometimes there might be more waste. I lost y'all, so I guess I'll say basically that often credit unions, community banks, because they're still operating within the system that exists, they don't actually have the market power to actually change the system. So they also end up relying on fees, relying on various other practices that really Wall Street holds up. But that's part of how you survive in this industry currently is by playing that game. And so often when there's legislation, you will have the credit union lobby with community bankers actually fronting for the big banks on some of these issues. And so I think that's one thing that's also important about a public bank is that they can actually help shift the market, right? That it's actually something that has enough market power to be able to say, actually, here's how banking should be. And we're not bound by the same considerations of the other private sector actors. And at the end of the day, that actually is another way in which public banks to really sort of enhance and actually, basically make it, can actually also be a check on some of the more community, the more local pieces of the banking infrastructure that are still at the end of the day private sector and part of the system that exists.
All right, let's try to get at least one more question in if we can before we go to the next section. Frank, do you have a question? You may be muted, and if not, I'm going to go back to Beth.
Sorry, I'm not muted within Zoom. I was muted on my keyboard. Apologies. There was a question regarding how is the public bank able to control, for instance, its investments in housing, and can it require that some of its housing investments be affordable? And I think that would be one example of ways that it can drive how it's lending toward particular goals.
Frank, if I may, I think that Karl Beitel is going to be speaking later on today. We'll really have a much better handle on that, although Amara and Saqib probably do as well. But affordable housing is an area that's kind of a misnomer in some ways. We've seen affordable housing being a sop to private developers in some structures. The public bank, I think, can bring a new level of integrity and potentially, I think, excitingly, some creativity in how we use the equity of to build an affordable housing inventory and opportunities for people.
Great. Okay, let's go back to Beth and maybe get one more question. I think we got about a minute and a half.
Sure. Lisa asks, could a public bank be used to fund public renewable energy development that is, quote unquote, discouraged or not allowed under state or other laws?
So I'm going to encourage folks to go to our Philadelphia Public Banking Coalition website because we had, I'm going to get their name wrong, but I think it's sometimes called the Green Bank, but it's essentially an arm of, I think the Power Authority, but they are finding ways to create more financing for essentially green and things like that. So that's an episode of Financing Philadelphia's Future that you can find there. Walt.
Yeah, if I just throw in on that, it's a bit of a misnomer. The green banks are typically revolving funds in which, whether states have them, most states have them, but they're not really banks. So they're not creating money, they're leveraging their money with private dollars. Which is much different than creating your own money, which actually builds the monetary strength of the economy instead of moving it from one city to into another and just kind of keeping things static. But green energy, you should know, around the world, public banks have been really instrumental in moving that forward. Like, for example, the KfW in Germany has been the prime driver of about 75% of their investment in green energy. And I think, and renewable energy and so forth. So I think we see too that the inherent opportunity for public bank is for them to do things that commercial banks don't want to do or aren't likely to do. So we have patient capital potential to invest in some of these projects that the market, the private capital market, may not have much interest in unless it can, make some money.
And I just wanted to add to that, to Walt's statement, because I think it's really important that we put in context not only emerging sectors like the green sector, renewables, also cannabis. I don't know what the status is in Pennsylvania, but I know in Illinois it just became legal, and in other states it's become legal, and it's still there's still challenges because at the federal level it is not legal. And so when we're thinking about emerging sectors and how a public bank could serve as a framework for those emerging sectors, there's so many opportunities in that space. But also just kind of getting back to nuts and bolts when it comes to infrastructure. So we're now in the budget reconciliation process is playing out now at the national level, where they're arguing around about $3.5 trillion is supposed to go to infrastructure and what infrastructure actually means. When you go to any city and look at critical infrastructure, you'll notice, at least most cities, have extreme challenges with upgrading current infrastructure. In Chicago, we still use lead water lines, which, we know is a neurotoxin. There's severe effects, negative effects for that. And so because of the cost has always been the prohibitor, the reason why it doesn't get done, those lead lines don't get replaced. And we've only replaced maybe a few lines out of thousands that need to be replaced because of the cost. So these are the kinds of projects that they will go to the JP Morgan Chase, the Bank of America, the Wells Fargo, which are actually depositories, and they'll get these extremely high interest rates that almost make it prohibitive to even embark on upgrading that infrastructure. And so when we think about what a public bank can do, it's emerging sectors for sure, but it's also just the nuts and bolts, critical infrastructure that's required for cities to be quality, for cities to be safe, and for our infrastructure to actually meet the needs of the people. So I think that's also important to keep in mind.
Thank you for that comment, Amara. All right, we're actually doing pretty good on time. We're about 1 minute into the next section, but I'm going to turn it back over to Steve so we can move into the next panel. Steve?
Awesome. Thanks, Vanessa. Man, that last section really spoke to me a lot, y'all. I'm just thinking, as a Black man, as a Haitian immigrant, sometimes I really get angry, like hearing Dr. Omar's, story about or presentation, thinking about Bank of America's historical influence in my home country of Haiti, gets me angry. I'm ready to take my money back from Wall Street. To know that our money has been used against us, as it's really upsetting. I think one thing we all by now are realizing and learning from these amazing speakers is that as we come out of this pandemic, hopefully soon, we need new ideas. We need bold visions that can meet this moment that we are in. Dr. Amara talked about the uprising. These things didn't just happen overnight. And so we really need to rethink how our economy and our banking systems are restructured. And I think what you've heard is that the public bank is that idea to live up to that moment. The truth is we can't return to how things were or continue to rely on a system that is built on greed and inequity, a system that has, as you heard, have hurt so many people in our communities. So for the next 30 minutes, you'll hear how a public bank can actually take us into the future. And so what I'll say is, as someone who's worked on several local issues and campaigns around housing justice to protect renters and homeowners, I'm super excited about this conversation, specifically how establishing a public bank can lead us closer to housing justice for so many people in our city. And our next panel is the perfect group of people to talk about this. They have broad experience in community organizing, economy, economics, policy. So yeah, let's get into it. So our first speaker, we have two Peters today with us. Our first speaker is gonna be Peter Sabonis. Peter is a human rights development program director at Partners for Dignity and Rights, promoting community economic development. He has successfully worked with community organizations to prioritize community land trusts in Baltimore throughout the city's affordable affordable housing trust fund. Next, we also will have Karl Beitel, sorry if I screw up your last name, Karl, who is a director of the Public Banking Project out of the Rocky Mountain Public Bank Institute, where he conducted research funded by the Ford Foundation. He is currently a senior analyst at Harvey Rose Associates in San Francisco, where he consults the Board of Supervisors about affordable housing and public banking. Finally, we'll also have today Peter Winslow give us a presentation. Peter is actually a member of the Philadelphia Public Banking Coalition, and he is also president of a Smart Collaboration. He is an advocate for environmental justice who was formerly the CEO of a company that manufactured, sold, and financed low-income housing. So each of these presenters will have about 8 minutes to present, and then just like the last panel, we'll go right into your questions. So again, feel free to put those in the chat. So we'll go Peter Sabonis, Karl, and then Peter Winslow. Pass it over to you, Peter.
Okay, thank you. Actually, I planned for 6 minutes, so I can kick those 2 minutes over to somebody else. I have been working for a number of years on community development in Baltimore with Black neighborhoods and community organizers in Black neighborhoods. And many of these neighborhoods have suffered from years and years of disinvestment, and many parts of them are undergoing gentrification as well. Two things going on in the same city. I want to get into community land trust because community land ownership has really been something that has gotten a lot of traction in these communities. And I'm going to share a PowerPoint here. Yep, that's the red line PowerPoint. Hold on, here we go. First, define community land trusts because they can be confused with things like a land bank, which you have in Philadelphia, which is a government entity that's focused on the conversion of vacant, abandoned, and tax delinquent properties. Sometimes community land trusts are confused with conservation land trusts, which is about open space, green space, staying that way permanently through conservation easements. But community land trusts are nonprofit, democratic organizations that acquire, own, and steward land permanently for the common good. That common good is manifested by providing affordable housing, commercial spaces, community spaces, or even farming on that community-owned land. That's the classic CLT. And the classic CLT is, it's a democratic organization. It's run by the community. It's got a defined service area. It's got a voting membership. It's got a tripartite or three-part board of neighbors, residents on the land, and public stakeholders. And it is devoted to equity. It's democracy and equity in the same place, and that equity is about keeping land affordable and resisting the pressures that the marketplace has that drives up land values. And this is done primarily through a concept of dual ownership. That is, the community owns the land, and an individual, household, or entity owns what are called legally the improvements on the land, the house, the business, the farm, whatever. And the community land trust legally separates these two, but yet it brings them back together again in what's called a ground lease, which ties the improvements on the land together with the land. And it gives the community, the CLT, the right of first refusal if the homeowner wants to sell. It also, the ground lease sets by a formula that the community came up with, a resale price that keeps it always affordable. And the community is the one who comes up with the formula. And the homeowner knows going in, okay, this is the formula. And the homeowner may get a portion of any equity that's realized, any profit that might be realized. And it's through that formula. But the formula is designed basically to keep the next household, the next buyer, in the same income range as the prior buyer. And this is done in a way, despite that guards against the property going to high market prices through this formula. It has been shown across the United States to be an effective model. You get a lower price initially, you get a lower price at resale, and this happens again and again and again. So what's the problem here? Well, there's a problem with finance. And as we've done community development in Baltimore and community land trust, I can tell you this is just one of many things that have led me and us to public banking. The ground lease, just with the mortgages alone, and take a home ownership situation, the ground lease that ties the improvements and land together states that if the owner of a house defaults on the mortgage, the CLT has the right to be notified and an opportunity to cure the default. Now, this is great. It keeps these CLT houses from defaulting and people from losing their homes. Now, banks, as you know, they make money by packaging mortgages and selling them to investors. Well, these CLT rights in these ground leases impact those mortgages, and they make the banks reluctant and nervous to provide CLT mortgages to CLT homeowners. So there have been some workarounds to date. Most community banks are really the ones who end up loaning to CLTs the most. And thank God they're there. But they hold these loans. They're portfolio loans. And there's only so many of those loans they can do. They don't resell them. And this keeps the CLT number small and loans relative to it small. And there's also a program where Fannie Mae agrees to buy CLT loans under certain circumstances. But the way banks operate, jumping through those hoops is not only a challenge for those trying to jump through them, but also a challenge for the administrators who find these programs to be out of the ordinary and thus don't get much attention or policy and procedural formulation, I should say. So we see the public banking option, at least in the CLT mortgage area, as one place that could facilitate CLTs getting to scale by backing or buying CLT loans from community banks or loaning to CLTs or backing loan problems, et cetera. And that's where I'm going to stop and give it over, stop sharing and give it over to the other speakers. I could go on what I call redlining 2.0, which we've experienced a lot in our CLT work, but maybe we can talk about that in the discussion. Thanks.
Turn it over to Karl.
Oh, hi, everybody. Can you hear me?
Yes, we can hear you.
Okay. So I think the prior panel did a very good job kind of outlining some of the issues and problems and, you know, a larger vision about what a public bank could do. I've done more kind of deep in the weeds work around public banking and housing, trying to look at how you could actually construct.
Please speak up.
Karl, can you speak up for a little, just a little bit? So,
excuse me?
Can you speak up a little bit? Some folks are having trouble hearing you.
Oh, okay, yeah. I'm not, yeah. Let me hold the computer a little closer. So, there's always kind of this problem talking about public banks, because you go from the identification of the problem and then the sort of this kind of broad outline, or, the vision of what a different kind of financial system would really be about, which I think is how I see public banking, is really sort of a first step towards a more social finance model. And then getting into the actual nitty gritty of how do you try and develop a public bank that can begin to achieve some of these objectives. So I will try to not get too deep in the weeds. I tend to have a tendency to do that. But we all know that affordable housing is crisis. That's just a given. It's a huge need. It's been dominated by the financial sector and the real estate industry in the U.S. for 100 years, and we see the result. So the complexity when you talk about housing from a financial point of view, irrespective of what kind, whether it's public bank or private bank, is that a property loan is generally long term, right? It's not like a 2-year loan. It's like a 30-year loan, and that's what makes that loan affordable to a broad range of buyers, of people who are trying to purchase homes. The issue you immediately encounter when you start to roll up your sleeves and figure out how can we make this work, particularly in cities that are very expensive already, is that you need to figure out a way to kind of get to large volume. If you really want to make an impact, you want to make a lot of loans. And so the question is, how do you get to scale? And what banks do currently is, the prior speaker mentioned this, is that they make loans, they bundle them, and then they sell them. They sell the loans. And then they get more money and they make more loans and bundle them and sell them. And there's good things and bad things about that. But one thing it does is it lets banks lend a lot more than if they made all the loans for 30 years and just held them on their own loan portfolio, right? Because then they're tying up their capital for a very long period of time. And to give us a sense of the real challenges, I'm using some numbers from San Francisco. San Francisco is, you may have heard, it's a disaster, affordable housing disaster. It's an extremely expensive city at this point. We did models of looking at $2 billion into a public bank, and if it was to make loans for new housing development in the San Francisco market, this isn't true other places, but that sounds like a lot of money, but you'd get about 2,500 units out of it. And then that's kind of capital that's tied up for a long period of time. So, the reason I'm saying this is that, one of the things that, the construction of a public bank needs to think about is where do you get the sources of capital into the public bank? And then if you want to do certain things like support long-term housing development, you do need to think about could we create a different kind of network where we could make loans and then sell them to foundations or certain kinds of pension investment funds or those types of things. So it's just, the point I'm trying to make is that the public bank needs to be seen as kind of embedded in this larger network. So part of that network is the local community banks and the credit unions and the people on the ground who would actually be more properly placed to evaluate credit quality and make loans. And then the other part of it is, do you have ways to kind of, churn your portfolio, for instance? And so we've done, in San Francisco, a fair amount of work looking at this, and there are some ideas we could talk about in more detail at some point. So that's one. And then the other thing I want to just highlight is the difference between building new housing, which a lot of times when people talk about affordable housing, what they're referring to, like, how can we build new housing? And new housing is more expensive per unit than purchasing existing housing. And one thing that I would really encourage people in Philadelphia to think about is that you want to kind of think for the long term, and how do you defend or protect existing neighborhoods and populations from the effects of gentrification and displacement. And if you can begin to buy a lot of existing properties, in some cases using powers of eminent domain, there's a lot of things you could potentially look at doing, and land trusting them or turning them over. They could become direct publicly owned housing. They could be transferred to a nonprofit entity that would be set up, what you're essentially talking about is taking a lot of the housing and land market that is currently caught up in, the US and global financial system. Really, it's just a speculative asset for them. And how do you just remove that as an investment opportunity from the private sector? And if you were to do that, that you would, I think, have made a tremendous inroad into being able to stop this process that has been ongoing now for 3 decades of, massive displacement, rising costs, those types of things. So those are just, a couple of things. I'll just conclude that the challenge, and also in some sense, I guess I wouldn't call it fun, but sort of like, trying to figure out how do you actually do this is that we need to think of it. We're trying to construct a institution that pursues certain objectives that are entirely different than those that govern the current institutional and regulatory order. So part of this thinking is alternative mechanisms. Let me just, one last thing. I think a big advantage of a publicly owned financial institution is if there was a change at the federal level, a political change at the federal level in a genuinely more progressive direction, far more than we're seeing now. You could imagine the public bank being kind of the conduit or the mechanism through which both federal money could be distributed locally, but also this mechanism I'm talking about how do you kind of allow local lending institutions, local public institutions to make loans and then sell them in a way that they're not just then going to be churned over into the global financial markets. So those are, just ideas, things to think about. Like I said, when you go from sort of the large level down to how do we make this work, it's kind of like this, it's hard sometimes to step down into the details without getting very, wonky and in the weeds. But hopefully that just indicates some of the things that need to be thought about.
Thank you so much, Karl, for that. So we'll have our final speaker now, and then we'll get to Q&A. Peter Winslow, I'll turn it over to you.
Hey, thanks, Steve. Let's envision how our public bank will improve the quality of life for every living thing through equitable empowerment of financial privilege, access to money, for those people who the current system has denied such privilege in the past, for those projects that the current system has failed to serve adequately. Philadelphia has identified an unmet need for $840 million per year to finance local minority-owned small businesses. Let's envision how to unleash that latent entrepreneurial energy. Let's envision a paradigm shift where the mission of our public bank is to serve as an intentional change agent, to infuse financial justice within our economic environment, to nurture the local financial ecosystem for the benefit of people and planet while promoting profit, to identify and fill inequity gaps in the availability of credit and access to financial services, to analyze and remove systemic impediments to desirable business activity. Consider the stakeholder interests that can be served by this mission. Within their environments, affordable housing concerns the environment in which people live. Business development concerns the environment in which people work. Public education concerns the environment where people learn. Financial justice is social justice applied within the financial context. Environmental justice is social justice viewed through an environmental lens. The collective application of fairness by our social world and our engagement with the natural world through the built world. Our environment is the conditions in which life exists. We experience the world passing through us, first as our perception of the natural environment, the biosphere embracing us along with the plants and animals with whom we share air, land, and water. Second, as our interaction with the built environment, our creations sustaining us in the places we live, work, and play, learn and pray, travel and communicate, our infrastructure, housing, industry. Third, as our engagement in the social environment, the cultural framework guiding us in the way we do things here, as expressed through our arts and sciences, laws and norms, politics, and commerce. We experience justice as our collective sense of what constitutes fair treatment. Justice exists only to the extent that people create it through combined effort to achieve communal agreement and harmony. Our public bank, if, as Martin Luther King Jr. observed, the arc of the moral universe is long, but it bends toward justice, it is we who must create the bending. Our public bank can do a lot of bending to correct the limitations and inequities of our current systems for confronting the persistent and existential challenges we face. The traditional financial system has promoted historical exploitation of human and natural resources, leading to sacrifice zones, blight, disease, squalor. Land, air, and water have been poisoned. Poor people, Black people, brown people are the populations most subjected to these conditions. This financial system allows environmental injustice. This financial system isn't fair. The situation must change. Environmental justice, like all justice, is about putting values into action. Our public bank must be driven by core values, not by a desire to maximize profits. Our public bank must be prudent, professionally managed, and financially self-sustaining. Our public bank must be guided by explicit values that include the public welfare rather than private profit, transparency while respecting privacy, accountability, inclusion, democracy, regeneration instead of exploitation. The processes through which our public bank is brought into existence and subsequently operates should reflect consistent applications of our collectively agreed upon values. Our values need to be embedded within the legal structure that empowers our public bank, within the organizational culture of the professionals that manage our public bank, within the expectations of the investors, partners, and customers who do business with our public bank. With respect to developing our built environment, housing, for example, our public bank will support regenerative economic practices and oppose exploitation, require projects to incorporate renewable energy and energy efficiency technology, nourish natural habitat and sustainable ecosystems, preserve community identity and cohesion. The public bank will partner with CDFIs, credit unions, community banks, and others in the financial ecosystem, as well as with Philadelphia Gas Works, the largest publicly owned utility in the country, to finance transformation of its business model from selling fossil fuels to providing renewable energy and energy efficiency. With the Philadelphia Energy Authority and the Philadelphia Green Capital Corp to finance photovoltaic solar installations, electric and geothermal microgrids, and other renewable energy and energy efficiency projects. With the Philadelphia Housing Development Corporation and its Accelerator Fund to finance affordable housing development. Consider that 6,000 of Philadelphia's 1.6 million people are homeless, while 12,000 homes are vacant and 30,000 building lots are empty. So how can our public bank help us better match our need with our latent supply? Wouldn't investment to improve the habitability of our vacant housing stock be preferable to expenditures to park families and hotels? Consider that a Mortgage Bankers Association study following the housing market collapse in 2009 reported a foreclosure rate of only 0.56% for community land trusts, while 3.31% for prime and 15.58% for subprime mortgages, 6 and 29 times higher. How can public bank guarantees and credit enhancement best mitigate the misperceived risk of lending to community land trusts? Shouldn't financing for land acquisition and improvements be available irrespective of ownership structure for community land trusts and housing cooperatives? Consider that half of the worthwhile affordable housing projects can't proceed because sufficient grant money isn't available. How can the public bank help provide alternative funding sources for these projects? Consider that the city's longtime owner occupants program, LOOP, provides a homeowner tax abatement to help poor elderly residents cope with higher real estate assessments and taxes resulting from increased property values in gentrifying neighborhoods. But the city forgoes revenue and currently caps this program at $25 million. How can the public bank help to prevent dislocation from being a result of gentrification for neighborhoods? Couldn't the city receive current revenue while a public bank program finances deferred tax liabilities secured by increasing net asset value? Currently, the ability of our society to engage in projects that would improve our quality of life are severely constrained by lack of money. As a result, progress has been inadequate in addressing persistent systemic problems such as intergenerational wealth creation, response to climate catastrophe, and environmental injustice. Our public bank will help to ease the financial restraint. Then the grit, skills, and imagination of Philadelphians will allow us to take care of the rest. Our public bank will help us help ourselves to envision and work toward a better future. Thank you.
Thank you, Peter. Thank you all for those amazing presentations, Peter, Karl, and thank you, Peter, for that amazing, closing us out with that amazing presentation that really, highlights and shows what we're fighting for, right? Which is a public bank that is rooted in values of racial, economic, and environmental justice. We'll go to Q&A and then Vanessa will lead us to our first break. I'll turn it over to you, Vanessa, for questions.
Thanks so much. And thank all the speakers. Wow. So that discussion was about local inequities. And I am putting into the chat, let me go ahead and press return on that, a link to Financing Philadelphia's future episodes. They are on the public banking website. And I put that there because several of the guests who've been on with Councilmember Derek Green to talk about what a Philadelphia public bank might do have addressed things like, that really are sort of sitting outside of the regular access to funds, cooperatives. We had Emily Weiner on talking about, food co-ops and other types of co-ops that sometimes have trouble getting financing. We talked about the Green Bank and trying to finance renewable energy. And then we also had James Burnett from a local community development financial institution, institutions that have been set up and certified by U.S. Treasury to provide financing to underserved communities. So just a couple of ideas there, but I'm ready to go to some questions. Let's start this time with Frank. Do you have a question? All right, I'm not hearing from Frank. He may still be working on his muted. Beth, how about you? Do you have a question for our panels on this topic?
Yes, we have a question from Addie for Karl. Karl, it sounds like you're saying that a public bank would need to sell loans to institutional investors to support a meaningful increase in housing, but institutional investors may be at odds with the public bank's mission, especially during a financial downturn, for example, foreclosing on homes. How could a public bank protect its community from investors who buy its loans? And then there was a follow-up from Luke who said, related to that question, Luke found Karl's suggestion of selling loans to pension funds very interesting. Could this be a way to keep the money in Philadelphia and support a mutual economy? Use the bank as a safe public investment that ensures a secure retirement for Philly's public sector work. So that was kind of a 2-for-1. Yeah. Anyway.
Yeah. No. Those are really good questions. The answer to the first one is absolutely. I mean, most institutional investors, they want the best rate of return that they can get. So they are, by definition, not going to be very interested in loans that are below market rate interest. and maybe for projects like community land trusts or publicly owned housing stock that is very outside the kind of norm of the privately owned home. So the challenge becomes, how do you seek out sources of financing? So this is one thing that has, because these efforts are haven't really moved forward yet. There hasn't been sort of those concrete discussions. San Francisco is convening a public working group to actually come up with a business plan, and hopefully that will be part of it. But I think that there are potentially sources of funding for the kind of mechanism I'm talking about. You would have to, a lot of what a public bank would do would be developing and cultivating and maintaining those relationships, and it would be understood that they are buying loans that do not conform to traditional standards, but they would generally be very safe loans because of the extremely low default rate. So what you'd be saying to them is like, you're not going to get your normal, quote, normal rate of return, but you're getting a very safe investment over the long term. And so that I think is the problem. That how do you find those sources? Of course, it would be great if the federal government would step in and provide that source, right? But that's not happening anytime in the immediate future. There was a second aspect to that question that I wanted to just. Beth, was there a second part?
Oh, yes. Sorry. The second part was that they found your suggestion of selling the loans to the pension funds very interesting. Could this be a way to keep the money in Philadelphia and support a mutual economy, use the bank as a safe public investment to ensure secure retirement for our public sector workers?
Yeah, exactly. And it's also a way, it's creating a mechanism where you're beginning to pull capital out of the global market and putting it back into Philadelphia. So it's not just retaining local money, but you're actually bringing that's why it's an important thing to think about, is when you sell the loan, you're bringing money that would otherwise go into some other investment, right? So you're bringing that money that's kind of out there in the world and bringing it back into Philadelphia, making more loans, selling those, bringing more money back. So if you can find the people who will buy those loans, let me just say, there's a lot of money out there. There is so much capital in the world, and if you could just tap a little bit of it, you could make a huge impact. You would begin to make a real dent in how things work.
Can I add that the from the investor standpoint, there's a combination of looking for risk and return, and one of the things that we have found in looking at the situation is that the risks are somewhat misperceived, and as was demonstrated by that study by the Mortgage Bankers Association, that the kinds of projects that we're talking about are really marked up for systemic reasons in terms of the way the underwriting has to be done and so forth. We think that there can be innovations from the public bank that will reduce the cost of putting these projects together, be able to mitigate the perceived risks because of the misperception, and do that through blended rates of participating with other lenders, of being able to provide credit enhancement guarantees and other kinds of security, so that the investment to the impact investor would be very attractive for the kinds of projects that we're talking about.
Thanks so much. Okay, so that's the time for our Q&A. We're going to move now into a 5-minute break.